Hello, ladies and gentlemen, and welcome to TrainHR's live webinar on detecting and preventing accounts payable fraud. My name is Michael, and I'll be your host for today's session. And on behalf of the TrainHR team, I'd like to thank you all for being part of today's webinar. Today's webinar is being presented by Mr. Peter Goldman. Before we start off, a few words about Peter. Peter is the founder and president of White Collar Crime 101 LLC, which is the parent company of Fraud Aware and publisher of the monthly newsletter White Collar Crime Fighter. And Peter's also been the publisher and editor of White Collar Crime Fighter for over 12 years, and is also recognized as a leading expert in the areas of fraud detection, prevention, investigation, and training. And he has also written numerous articles on practical approaches to fraud prevention and detection for, among others, Internal Auditor, Investors, Business Daily, Financial Executives Institute, and Bottom Line Personal, to name a few. And also Peter launched the development of Fraud Aware in 2001, and following the enactment of the Sarbanes-Oxley Act of 2002, Fraud Aware had began helping companies resolve the unexpected increase in fraud losses despite the costly implementation of the SOX mandated internal controls. And in addition to directing the ongoing development and refinement of Fraud Aware, Peter continues to publish White Collar Crime Fighter and to speak at events sponsored by the Association of Certified Fraud Examiners as well. And he's also a member of the editorial advisory board of the Association of Certified Fraud Examiners. And Peter holds a bachelor's degree in political science from the University of Michigan, and also a Master of Economics from the London School of Economics. And he's also an active member of the Association of Certified Fraud Examiners, the Institute of Internal Auditors, the High-Tech Crime Investigation Association, and also the Information Systems Security Association. And we are honored to have Peter with us today to present today's webinar. Ladies and gentlemen, before we start off today's session, I'd like to quickly outline today's program. This webinar is for a 60-minute duration. First, Peter will take you through today's webinar, highlighting the areas he would cover, and then share with you his presentation. And also would like to inform all our participants today that once part of today's teleconference, you've been placed on mute and would remain so until the Q&A begins. We have a couple of minutes at the end for your question and answers, but if you do come up with your questions during the session, please post them in the Q&A panel or the chat column. And for any reason, if you do get logged out of today's session, please follow the same procedure to join in again. Now that we're all ready, I request Peter to take it from here. Peter?
Michael, thank you very much for that generous introduction, and welcome everyone as well to today's presentation on accounts payable fraud. This is a topic that is of paramount importance to people like myself who spend their days looking for new ways to fight fraud in different areas. And the reasons are several, but the most important one, as you can imagine, I would think, is that most of the funds that flow out of any organization typically do flow out of the accounts payable function area, and that in and of itself presents problems because it concentrates a number of different potential opportunities for fraud to be committed in the accounts payable area. But we'll get into the details of all of that very shortly. I just want to give you an overview of today's presentation. We'll begin with an overall summary of the statistical framework for fraud in general and some of the aspects of accounts payable fraud in particular, just sort of to get some perspective on just how serious a problem we're dealing with here. Then we'll talk about the actual specific types of accounts payable fraud. Now there are, I would venture to suggest, probably countless variations of different accounts payable fraud, but there are some overarching common ways that need to be familiarize yourself with initially in any case. So we'll focus on those primarily. Then we'll look into the important and indispensable red flags of these various fraud schemes, because those red flags, as I will explain to you in some detail shortly, are the key to detecting and preventing accounts payable fraud going forward. And that would lead us into the sort of culminating segment of the presentation, which is indeed on prevention of accounts payable fraud through effective anti-fraud controls. Then, as Michael mentioned, we'll take your questions and we'll finish up with a short conclusion. So without further delay, let me start off, as I suggested, with a brief statistical overview of what the fraud problem really looks like in both the U.S. and global contexts. According to the Association of Certified Fraud Examiners, which for those of you who are not familiar with it is probably best described as the go-to organization for anything having to do with fraud detection, prevention, investigation, and audit, they do a biannual study of the fraud situation worldwide and have concluded most recently that fraud losses amount to an astonishing $3.5 trillion globally. The 5% figure that you see there on your screen next to that statistic relates to the percentage of gross revenues that are lost by the average organization to fraud in any given 12-month period. So your organization may actually be losing less, it may be losing more, but overall the ACFE has determined that the average amount of losses to fraud for any organization averages out to approximately 5% of gross revenue. That's a significant number even for smaller organizations. The next interesting statistic is the piece of information that was derived from the preeminent international fraud investigation firm Kroll. They do an annual global fraud report, and they determined that in the 12 months of 2010 to 2011, fraud losses increased by an astonishing 20%. Now, you may be wondering, why don't I have more up-to-date statistics than 2010, 2011? Well, there is significance to this. The reason I include this statistic is that it demonstrates most dramatically how fraud increases during difficult economic times. And the year 2010, 2011, as you probably clearly recall, was sort of the pinnacle of the economic Great Recession that followed the financial crisis of 2008. As such, it drove up fraud losses by a significant double-digit percentage rate. The good news is that during most regular recessions, we see much lower rates of increase in fraud losses. Nonetheless, in that one period alone, we saw that losses increased in dollar terms from $1.4 million to $1.7 million per $1 billion of sales. So we can see here, as I say, in quite dramatic form, that during difficult economic times, fraud does increase. It is always ongoing, but it is most problematic, I guess we could say, during recessions. Moving along, 3/4 of companies surveyed by the Big Four accounting firm KPMG reported that they had experienced at least one incident of fraud in the last 12 months. That's also a fairly startling statistic when you think of it. And then following that, to give us a better idea of what these frauds cost in more of a down-to-earth level, the ACFE estimates that the average cost per incident of fraud is about $160,000. Now, that number, $160,000, is derived from an average of the estimated cost per incident of fraud in a whole host of different fraud schemes. probably 25 to 30 different fraud schemes that the ACFE studies, with the low dollar amount losses occurring in such areas as travel and entertainment and purchasing card frauds and those sorts of things, but the higher dollar losses occurring in the high-profile accounting frauds that we continue to hear about, but which were so widely publicized and colorfully publicized in the early 2000s, such as Enron, WorldCom, and Adelphi, and others. Billing fraud, which is probably, although there is no statistical confirmation of this, but nonetheless there is enough anecdotal evidence to suggest that billing fraud is probably the most common form of accounts payable fraud. That comes in at an average of $100,000 in losses per incident, according to the ACFE. That is an important number for us today, since we'll be focusing on